Have you noticed how fast things can change in big industries, like
Yeah.
investor interest?
Oh, absolutely. It can pivot remarkably quickly.
Yeah, it's like watching a giant ship turn. And right now, in pharmaceuticals and healthcare, which is just massive, we're seeing this really surprising shift.
Hmm.
Why are these innovative ideas, specialized services, and these breakthrough drugs like the GLP-1s suddenly grabbing all the attention?
While the generics, the ones that used to be the reliable workhorses.
Right. They seem to be, I don't know, losing their shine a bit.
That's exactly it. It's a fascinating dynamic, and, well, that's what we're going to unpack for you today.
Great.
So this deep dive, it's all based on notes we got from the Nuvama Specialty Chemical and Healthcare Conference. Just happened in 2025.
Okay.
And we've really gone through them, pulled out what we think are the key insights, what investors are thinking, where the growth spots are, and maybe some of the challenges ahead.
Right, that's the mission. Because these sources, they give us a real feel for what institutional investors are thinking. This is like fresh off meetings with 15 different corporations.
15 major ones, yeah. And over 500 investor interactions.
Wow, so a lot of
And
conversation.
a huge amount.
So we're aiming to, cut through that noise for you, figure out what's really driving the excitement, but also the caution. Basically, give you a shortcut to understanding what's important in pharma and healthcare right now.
Focusing on what's truly impactful.
Exactly. So let's start with that big shift in investor feeling. The Nuvama notes make it pretty clear investors are really prioritizing differentiated ideas.
That's the term they're using.
Yeah. And if you look at where the focus is, healthcare itself, that's getting about 30% of the attention.
Which is significant.
Then you have CDMOs, contract development and manufacturing organizations, and APIs, the active ingredients. Together, they're grabbing about 25%.
Still very strong.
And the GLP-1s, I mean, the buzz around those new weight loss and diabetes drugs is huge. That's another 18%.
Right. But what's really telling
Is the generics, isn't it? Historically, that steady volume market.
relatively lower interest now. It
Yeah.
really signals a big pivot. Investors are reevaluating where the long-term value is.
So less about volume, more about specialized innovation.
Precisely. And there are solid reasons for this caution, especially around some of the big large-cap pharma companies.
Okay, like what?
Well, there are concerns swirling about their current product mix, specifically how generics of big blockbusters are doing, like Grevlimid, Gumeribetic, G-Spiravir.
Genarc, lanreotide, those big names.
Exactly. They're facing more competition, maybe declining sales. Then there's this background hum of anxiety about potential U.S. policy changes.
Always a factor. Tariffs, maybe.
Could be tariffs on foreign-made drugs, or other policy shifts. And just a general question mark over whether the earnings for these big players are sustainable out to, say, fiscal 27.
That policy uncertainty, it always makes investors nervous. And the notes mention this continued anxiety about U.S. policy specifically.
Yes, and they flag the next couple months as being pretty critical.
Oh, really? Why?
Because the U.S. might announce some initial steps related to how they handle drug imports. That framework could really shake things up for global supply chains.
Okay, so how are companies actually dealing with this kind of regulatory tightrope?
Well, Cipla is a really good example of a company navigating this strategically.
Okay.
They've built up a pretty good pipeline, with things like generic Abraxane, generic Advair, Nalatenib, generic Symbicort.
Solid prospects.
Yeah. And a potential trigger that could ease some investor nerves is if they gain more market share with lanreotide. That could help offset some broader generic pressure.
Makes sense.
Plus, they've been smart about diversifying where they manufacture for U.S. sales. It's roughly a third from the U.S., a third from India, and a third from the rest of the world.
Spreading the risk.
Exactly. And their view is interesting. They seem to think tariffs up to, say, 10% are, quote, manageable and non-threatening.
Really?
Yeah, and they even suggested it might actually benefit some generic players in the long run, by shifting the competitive dynamics.
Okay, interesting perspective. So amidst this caution around the big guys and the policy worries, investors are clearly looking for growth. That brings us to these other areas, like CDMOs.
Right. Contract development and manufacturing.
Even with worries about the U.S. formulation side, CDMOs are still really grabbing investor attention. Why is that? What's keeping the excitement going?
A big piece of it seems to be the China Plus One trend. It's really playing out now.
The supply chain diversification, moving some manufacturing out of China.
Exactly. Companies are actively de-risking. Aarti Pharmalabs is a case in point the notes mentioned. Several projects moved from China to India, It shows that China Plus One strategy is, well, in full swing.
And Aarti Pharmalabs sounds like a prime example of that CDMO growth story.
They are. They're projecting, get this, 30 to 40% year-over-year growth in their high-margin CDMO segment for fiscal 26.
Wow, 30 to 40%, that's huge.
It is. And they offer the whole package end-to-end services for these small molecule NCEs, the new chemical entities.
So brand new drug compounds.
Right, taking them from early clinical phases right through to commercial supply. And what's really notable is that 75% of their CDMO revenue comes from projects already in phase 3 or beyond.
Okay, so these are projects pretty far down the development path, closer to actually hitting the market.
Much closer, which means more predictable, higher value revenue.
Yeah.
It's not just speculative early stage stuff.
Got it.
And to give you a sense of scale, they've got 61 active projects running right now with 21 different customers.
So it's real ongoing work.
Absolutely. And they're expanding capacity too. Their new site in Atali, Gujarat, that's expected to be running by FY26. Phase 1 adds 450 KL capacity.
Big addition.
And they're looking into other areas too, like solid phase peptides, biotech products, anti-cancer stuff within the CDMO space.
Expanding their capabilities.
Right. It's also worth mentioning their direct API exports to the U.S. aren't huge, and those are generally duty exempt anyway. So any potential tariff hit is more likely on finished drugs, not their core APCDMO business.
Good point. Okay, so CDMOs are exciting, but then there are the GLP-1s. I mean, you can't go anywhere without hearing about them.
Absolutely the hot topic. The notes said they were discussed at almost all pharma meetings.
Yeah, seen as this massive near-term opportunity. Obviously, the clinical results are incredible, but what's driving the investor frenzy specifically?
It boils down to a continued demand-supply mismatch. Simple as that almost.
Just can't make enough of them fast enough.
Pretty much. The demand is just soaring, way ahead of current manufacturing capacity. And that's directly benefiting companies involved in the supply chain, like Divi's and Dr. Reddy's.
Creates a real market opening, at least for now.
Exactly. Until supply manages to catch up.
And Eris Lifesciences seems really poised to jump on this. The notes talk about FY26 being an inflection year for them.
Yeah, they're projecting 50% PT growth profit after tax. Huge jump.
50%.
They're positioning themselves to, quote, make the most of the upcoming GLP-1 opportunity in India.
And they have a pipeline ready to go.
Seems like it. They're looking at launching generic Saxenda, plus another undisclosed insulin analog in FY26, then a premix insulin analog in semaglutide.
Right.
That's a big one in FY27.
Wow.
And another insulin analog plus a GLP combo drug in FY28. So a steady stream of launches planned.
They're really gearing up. What about manufacturing capacity for these?
It's a good question. They have a new cartridge facility in Bhopal that's set to be commissioned by FY26, and they'll start validating it for GLP-1 fill finish in Q4 FY26. So they're building the capacity for both insulin and these GLP-1s.
Smart move.
And here's a key insight. Eris looks set to gain a significant part of the human insulin cartridge business because a major innovator is actually exiting that market segment in India.
Oh, interesting. How big is that market?
It's worth over 4.5 billion rupees. So a big chunk of business potentially up for grabs.
And Eris has shown they can capture share.
Definitely. They've already doubled their market share in the anti-diabetes space in India from 3% to 6% in just 3 years. So they have a track record.
Okay, so it's not just Eris, though. The whole sector is buzzing about GLP-1s, right?
Oh, yeah, it's widespread. Alembic Pharma, for instance, they're aiming for a day-one launch on tirzepatide, another major GLP-1, though they admit they're maybe a little late, starting on semaglutide.
Different strategies.
Right. Cipla is looking at both making GLP-1s in-house and partnering up for the first wave of launches. Injectables first, then maybe oral versions later.
And Lupin.
Lupin's expecting growth, too, from insulin and GLP-1 launches next year. They're aiming to boost their human insulin market share by about 6 to 7%.
It really is a race, isn't it? Everyone trying to meet this incredible demand.
It absolutely is.
Okay, so moving away from the drugs themselves, let's talk about the broader healthcare services sector. Hospitals, clinics, that sort of thing. The outlook there sounds pretty positive, too.
Very promising, yes. The notes suggest double-digit growth is possible. And importantly, this growth seems achievable mainly through adding more beds without necessarily hurting margins.
That's a good combination, expansion plus efficiency.
Definitely. And look at Aster DM Healthcare. They have some seriously ambitious expansion plans.
What are they aiming for?
They're targeting adding 3,300 beds, That's a huge increase, about 54% of their current capacity. It would bring them up to 9,400 beds by fiscal 28.
Wow. Where are they focusing this expansion?
Major additions planned in high-growth spots like Bengaluru and Kerala. And it's not just about size. They're aiming to boost margins, too.
How much?
From around 20% now up to 23–24% within 3 or 4 years.
That's a solid jump. How do they plan to do that?
Through better procurement, managing manpower more efficiently, and finding synergies across their operations, standard efficiency drivers, but applied systematically.
And they have specific things driving that growth.
Yeah, they expect their Kerala cluster to rebound.
Wow.
And they see huge potential in the Sarjapur area, Bengaluru.
Why Sarjapur specifically?
A big population there and really high insurance penetration, especially among all the software professionals. So a strong base of paying patients.
Makes sense.
Plus, they have a merger with QCIL that should complete by Q4 FY26, which is another factor expected to contribute to growth.
Okay, so Aster is going for scale. What about other players? Jupiter Lifeline Hospitals. Their approach sounds a bit different.
It is more strategic, maybe. They're focused on hand-picking micro markets, specifically in West India, rather than just expanding everywhere.
Interesting. So targeted growth.
Right. They have 3 greenfield projects, new hospitals planned, which should basically double their overall capacity to 2,500 beds.
Still significant growth.
Absolutely. And they're even thinking about a 7th hospital, possibly in the Mumbai metropolitan region, the MMR. They're also open to an O&M model operation and management.
So running a hospital potentially owned by someone else, less capital intensive.
Exactly. A way to grow faster, perhaps. And an important point from the notes. Their existing hospitals, like the ones in Indore and Pune, haven't even hit their full potential yet.
Ah, so there's still growth left in their current assets.
Yes, quite a bit, it seems. And crucially, the analysis suggests Jupiter is set to generate enough cash flow over the next 3 years to comfortably fund all this expansion. Financial stability is key.
Very important. Now, you mentioned less capital-intensive models. Jeena Sikho Lifecare seems to be taking that idea even further.
They really are. They have this unique asset-light college hospital model. It sounds quite innovative.
Asset-light college hospital, how does that work?
So they're targeting huge expansion over 3,000 beds by March 26 and aiming for 10,000 beds within 5 years, mainly through tying up with colleges.
Okay, so the college provides the building.
Essentially, yes.
Okay.
The college bears the infrastructure cost. Jeena Sikho comes in, handles all the operations, and they have an arrangement involving rent, plus a share of the revenue.
Clever way to scale quickly without massive upfront investment.
Very clever. And they focus on specific treatment protocols, these 21-day protocol admissions.
What does that mean?
It sounds like a standardized, efficient approach for treating conditions in high-margin areas they specialize in, like cancer, liver issues, sexual wellness, streamlined process.
Aiming for efficiency and profitability.
Right. And speaking of profitability, they also put through a 15% rate hike back in April 2025 at several of their major hospitals.
Okay, an interesting model to watch. Finally, let's shift to teeth. Dental care. Laxmi Dental came up.
Yes. Positioned as the go-to play if you want exposure to the dental market in India.
Which is described as underpenetrated and fragmented, but growing fast.
Exactly. Highly fragmented, lots of small players, but the overall market is expanding rapidly. Laxmi Dental seems confident they can achieve 20–25% long-term revenue growth.
That's strong, and potential for margin expansion, too.
Yeah, they see ample scope for margins to improve. A big driver here is digitalization in their domestic lab business.
How's
They're already at 64% digital penetration and aiming for 90–100%. Going digital means cost savings and much faster turnaround times for things like crowns, bridges, aligners.
Makes sense. And are their products like aligners being well received?
Apparently so, yes. Good reception from dentists, and their specific brand for kids, Kids Dental, is also growing.
What does the overall Indian dental market look like in terms of size?
It's already pretty big and growing fast. It was about USD 3.4 billion back in 2023,
Okay.
and it's projected to grow at over 12% per year, a 12.6% CAGR, to reach almost USD 8 billion, 7.8 billion by 2030.
Wow, that is a significant wave of growth to ride.
Definitely a fast-growing space.
Okay, so let's try and wrap this up. If we recap the key takeaways from the Nuvama conference, it really seems to be about this clear pivot, doesn't it?
Absolutely. A distinct shift in investor focus, away from traditional generics towards these differentiated ideas and specialized services.
Yeah, and huge excitement around CDMOs, partly driven by that China plus one trend.
And the GLP-1s obviously fueled by just massive demand that's outstripping supply right now.
Well, the broader healthcare services sector also looks promising. Strategic bed expansions at places like Aster, targeted growth from Jupiter.
And these innovative niche models, like Jeena Sikho's asset-light approach, or Laxmi Dental riding that fast-growing dental wave.
It paints a picture of a very dynamic sector really evolving quickly.
It really does. And if you think about the bigger picture here, all this focus on specialized differentiated healthcare, this investor appetite for innovation, these new models, it suggests medical advances might come faster, maybe some new treatments become more accessible.
That sounds positive, but there's always a but, isn't there?
Well, the big question it leaves you with is this. With all these specialized, potentially expensive advances coupled with these market shifts and potential policy changes we talked about, how does all this ultimately affect the cost and the accessibility of healthcare for you, for the average patient, down the road? That's something worth thinking about.